Hello everyone, welcome to another session on dollar INR. It has been an extremely eventful week this week, and I want to show you what the Reserve Bank of India has done to support the rupee. Okay, very exciting what happened in the last 4-5 trading sessions. We have been following this the dollar INR chart. Remember, this is the dollar INR onshore chart from 9 a.m. to 3:30 p.m. IST. So that is the prices that we are caught up here. So this we have seen a very clear-cut uptrend since the middle of May, June, and we have moved from 84.85 to around 91.07, 91.10. Okay, but very interesting. Look at what happened here in the last 3 to 4 trading sessions. You know, just 3-4 days back, RBI did a swap, a $5 billion INR swap, and we saw rupee gain by almost 1 rupee from 91 plus levels to around 90.10 to 90.25. Okay, that is what had happened on Wednesday. And what has happened today is even more interesting. You know, till obviously the market starts at 9 a.m. till 3:25, it was trading between 90.00 to 90.10.12, and then at 3:26, which is just 5 minutes left for the trading to end, 3:26 we see such a big fall in dollar INR from 90.10 to all of a sudden to 89.25, 89.30. So about a 70 to 80 paisa decline in the dollar INR in the last 4-5 minutes of trading session of today. Now typically it is the end of the week. Today is Friday and trading volumes are smaller, and RBI intervened, and that intervention had a massive compounded effect, and rupee made substantial gains today. Okay, from 90.10, 90.15 to close the onshore time at 3:30 at 89.25. Okay, so we saw levels of 91 plus this week, and now we have closed at 89.25, the onshore time 3:30 p.m. IST. So that is how the RBI drives the market, the magic wand at RBI, and that is we have experienced on 2 days in the 5-day week this week. Okay, so this is on the onshore chart. Let's come back to the offshore chart. Okay, let me come back to that chart, and then let me close this up. I will get here and I'll get my painter again. Okay, now this is the offshore chart. Okay, 24-hour chart. So I'll try and get this here. Okay, so that we can see it clearly. Again, same trend, except that this is from like more or less 24 hours. So now we see that after 89.25 at 3:30 p.m. we see around 89.64, which is the offshore price that is quoting now, 89.64. You know, almost 40 paisa higher than the INR close. Okay, so this uptrend is very clear and easy to understand, but I want to show you something very interesting. You need to look at these lines. Okay, this is the 25-day SMA, okay, which is the purple line, the same 25-day EMA, which is the yellow line. So both 25, the only difference is one is a simple average, the other is an exponential average. So they will try to be very close to each other, but since exponential will react faster to price. Okay, and then we have the 50-day SMA and the 100-day SMA, which are the usual SMAs that we track for a longer term horizon. Okay, so 50-day SMA is the blue line, this line. Okay, now if you look at how the prices have moved and how the moving averages have provided support. Okay, look at this region, how the moving average provided support. Okay, all these lines are here, and the spot price came to the moving average levels. Look at this here, again moving average provided support. Here also moving average provided support, but prices declined and remained there for some 5-6 days. Again support region, again support region. Okay, so what I am trying to tell you is that these moving averages, 25-day SMA as well as the EMA as well as the 50-day SMA, these levels tends to indicate what are the probable support levels in dollar INR. And currently, even if you look at the 25-day SMA and EMA, they come around 65 to 75 region, 89.65 to 89.75 region. So if you want to follow some kind of a market timing methodology, then any level around or below 89.65, 75, you can look to do some hedging on the dollar importer side, because in this rupee weakening, importers are the community that are the maximum worried lot, because they usually don't hedge and the spot has gone higher, they are paying very high prices. Okay, so if you want to look at some market timing methodology, then this is a good methodology to follow, the 50-day moving average and the 25-day SMA and EMA as well. So that region is the region which you can look to buy. Okay, and that typical region is between 89 to 89.50. And if you are more aggressive and you want a sharper decline and a bigger fall, then you can look at the 100-day moving average, which comes to around 88.50. Okay, so broadly, if importers want to hedge, then 88.50 to 89.50, that 1 rupee range is the level to look at to hedge. Okay, now this is on the market timing side. I will show you something more. Okay, let me come to this image. This is a slightly different image. This is not on dollar INR, but this is the dollar INR volatility chart. Okay, now what does a volatility chart mean? It means it helps you in taking ideas on what instruments to use to hedge. Okay, so we are going to look at options to hedge, and to decide what is the cost of the options, this is the indicator to look at. Okay, so let me just get this here. So if you look at, there are 4 lines here and all are various dollar INR volatility for various maturities, 1 month, 2 month, 3 month and 6 months. 2 are priced here on the right side and 2 are priced here on the left side. But if you look at the levels, most of them, the 1 month, 2 month, 3 month and 6 months dollar INR vols are around 4 to 4.25%. Okay, I want to show you this chart to indicate that, see, in the last 2 to 3 years, this volatility number had gone higher to around 6.5, 7.5%. So this is the higher range, and the lower range is around 2.5 to 3.5%. And we are now at around 4.5%, which means that the option volatility is somewhere around the long term average or slightly below the long term average. Now, why am I telling you all this about volatility is because this is directly correlated to the option premium that I pay if I want to use a vanilla option to hedge. Now remember, multiple videos I have shared with you where I had suggested that you should do forwards, but along with forwards you should also do vanilla options to hedge, and vanilla options comes with a cost. So our objective is to try and reduce that option premium cost as much as possible. And now, since the volatility is slightly lower than the long term average, the cost is maybe higher relative to the lower vols level, but it is not very high. Okay, it is more or less around the moderate region. But if you see the market volatility, I showed you the market volatility here. If you see the market volatility, the dollar INR spot is very volatile, and the option curve or option vols is still relatively on the lower level. So what is the bottom line? The bottom line is that you should certainly use vanilla options to hedge, both importers, now since importers have got a chance to hedge, as well as exporters. Now looking at this rupee weakening, if exporters would have remained unhedged, they would have capitalized this weakening, but they would be very nervous this week. Okay, remember, dollar INR just 3-4 days back was 91 plus, and now it is around 89, 20, 25, 30. So it's like almost 2 rupees lower. Okay, so 1.5 to 2% lower, 2 to 2.5% lower. So that is the risk you carry if you don't hedge. Okay, so vanilla options is something which both exporters and importers should do. And now, since the spot has come substantially lower, again in that region between the 50-day moving average and the 25-day moving average, so importers who were unable to hedge earlier should look to do some hedges. You can do some forwards, but certainly do some amount of options as well. Okay. Now, what is there for exporters? For a long period here, I have been telling exporters to hedge. Not that I know the market will correct, but the levels are good because rupee weakening is in favor of exporters. So exporters, I hope you would have capitalized, but if you are under hedged, then still do some forwards as well as options. till the time the US trade deal is done, I think the rupee will be under pressure and we might see some uptick back. So on all upticks, look to do some forwards, certainly diversify using vanilla options. Okay, so that is it from my side. Really exciting week, big rupee gain in the last 3-4 days. So go ahead and do your risk management strategy, use forwards and options both. So that is it from my side. Have a great weekend ahead.